All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Just verifying that we are live here. Want to make sure it's going through. Having a couple technical issues here this morning, so let me just double check here. All right. Looks like we are good to go. So we're hitting our time stop here for JNJ here this morning. So I'm going to back out of this. We'll talk about it a little bit more in depth here. But going to close the position here on JNJ. So create a closing order. And let's see here, 305. Will they give it to us for that? Nope, they won't. It's moving. It's moving. So let's go in here. We'll edit this. I just threw a market order in for 294, so out at 294 here on J&J, and done with that trade. Now, this is just a trade where it's hit our time stop, and that's it. You know, let me pull up the spreadsheet here. But we basically hit the number of days to hold it, and it hasn't hit the price target, so have to move on out. You can see here on the exit date, the 5:28 a.m. That's where we are. We need to be at 141.55 for that. So out of J&J here at 294 is the exit price. Let me update that here. So close date 5:28 a.m. and exit price 294 there with that. So that should take the challenge just up north of 4,000. Let me verify that before moving on, but I'm pretty sure that takes it just about 4,080. It's been a slow start in terms of the quantity and number of trades here, but a decent return for only 3 trades, where none of them have actually hit their profit level. Every single trade so far has been knocked out on a time stop and has not, really kind of emerged into that trend that we are looking for. So I'll take it. A lot of that's just the environment, and I expect, as we talked about, when the environment is choppy like it's been, like it is, then I expect that, hey, you know what, we grind a little bit, small gains here and there, but when it's trending, I expect that we're hitting our stops, our profit levels, and hitting those and running. So out of J&J, and we'll come back to that here just in a moment. Now, there are no new entry triggers here this morning. It's one where there's some close, Netflix, close. We have Facebook close, Microsoft close. You'll notice they're all tech names that are getting close here with that, but none of them triggering right here on this morning, on this kind of morning, pop and drop. We have kind of a market that is continuing with some of its chop here this morning, but you can see something like a Microsoft, has that 3-7 action on it. In fact, let's take the Bollinger Bands out of here, but has the kind of 3-7 crossover action trying to happen on it. It's not holding right here, but even if it does, the consolidation risk is one that the algorithm takes into account, and it doesn't use Bollinger Bands at all, right? That's not something that is used, but we can see pretty clearly what's happening with the Bollinger Bands. They're contracting. And what do we know when Bollingers are contracting? When they're contracting, the stock tends to go into consolidation. Now, eventually it breaks out, moves into a trend phase, but right now it's showing much more consolidation phase than trend phase, and we are seeing that all over the place in this market. One that I've kind of been wondering, does it trigger anytime soon, is a Facebook. It just hasn't, it just hasn't been able to trigger. Isn't triggering here this morning as well. And a lot of stuff like a Raytheon, and I know I keep coming back to Raytheon here, but it's one where we get the pop, then we get the drop, then we get the pop, then we get nothing. It's just pretty pretty mundane, pretty much consolidation there with it, and so no new signals emerging here this morning. Now over the weekend, and it looks like we had a market drop here. Let me go take a look since I jumped on video. Yeah, looks like market has taken another kind of push lower here, but let's see here. I'm just looking at what's moving. Looking at my news stream here. Okay. All right. Yeah, it doesn't look like too much that's game-changing here with it. But we do have small caps in the red, while the rest of the market's slightly in the green. We have utilities trading lower, financials trading lower, healthcare slightly higher. A lot of the bounce is in tech, but it's not everywhere. We still see Micron getting smashed and, just continuing to push on lower here. We're seeing a nice little snapback in something like a Chipotle Mexican Grill here this morning. After last week, and this is one of those where, I was asked last week, well, why doesn't this trigger here on the algorithm for a bearish signal, right? And we talked about at the time, it's just not something where the probability of trend lower is high. In fact, the consolidation probability is higher given what the numbers look like here with Chipotle. And, we've kind of seen that play out. We've seen that play out here in the short run. And, that's what we continue to see in a lot of things. And I know you're tired of hearing me say that, but it is that kind of same old here this morning. Now, there's not a lot that I look at in the news and the headlines here today and go, well, this is meaningful or that is meaningful. We have a lot of European politics that is starting to kind of hit the news. I know so little about European politics, and the only reason I know what I know is because of the markets. And, I'm not even a big fan of U.S. politics, and I live in the U.S. I don't like to, really follow it all that closely. I just do it for my job, for my trading. But European politics, all that stuff's going on. There's a lot of different possibilities and different things that could happen, and it's all speculation. It's all guessing and what ifs and all of that. But that's starting to hit the hit the news here. We still have, trade, China, Trump, and all of that, and nothing too abnormal in terms of the rhetoric that came out this weekend. With that, we did have North Korea, do another missile test. U.S. President Trump basically said he wasn't concerned, so the markets kind of said, who cares? There with that, so. Kind of same old headlines, same old market, and still kind of in this chop phase here. Okay. Now, when it comes to trades, over the years, I've oftentimes been asked a question after a trade: what's the lesson with this trade? And most of the time, my response is there is no lesson. There's nothing to take out of this trade in terms of a lesson, in terms of something to take and go, well, you know what, this trade was meaningful because of this, this, and this is what we should do going forward because of this trade. No, in fact, I'm very much against that. I very much think, you know what, if you try to take lessons out of each and every trade, you're going to be so full of lessons that contradict each other that you're not going to be able to see straight. Right? You're going to have the lesson of, hey, patience pays off, and the lesson of, well, you got to be quick at the same time, and now you're in your next trade and you're going, well, should I be patient or should I be quick? right? And you're just kind of you get stuck, right? You get stuck with all these lessons and wisdoms and trade methodologies and that are a dime a dozen out there, and that we as traders kind of create for ourselves. And where I stand, hey, rules, get them away from me. I don't want to hear silly rules out there in the market that just don't apply or that have an exact opposite in terms of a rule, right? And all of that type of stuff. So I'm normally very much, I push back in terms of, is there a lesson? But when it comes to J&J, Johnson & Johnson, and the 100K challenge, there's a big lesson here. And I want to discuss it, not because of the gain on J&J or anything like that. But when it comes to the challenge algorithm and it comes to trading this kind of automatic, more systematic challenge where the decisions are kind of defined going forward, it's not, every 5 minutes, well, should I hold? Should I buy? Should I hold? Should I buy? Should I hold? Should I buy? Should I sell? What should I do? Right? It's not, full of a ton of decisions. The decision making is very lined up. The decision making is very very easy when it comes down to it. But the lesson here is it's about the destination and not the journey. When I got into J&J, I got into it, and let's face it, we paid 15% more on the options than we should have because it was a morning after option expiration, right? That's just the bottom line. And, that's not something that's going to change going forward. While personally I don't like making trades at that time, there's nothing, that's just a personal bias. That's not something that's in the algorithm or anything like that. But overpaid by about 15%. Okay. The next day, the stock drops, and the next day it pops, and then it drops, right, and has this reversal on it. And it's negative, and the next morning it's down, right? You think about the journey, right? And if you're sitting there agonizing over a gain loss, over it's down, what should I do? Oh, well, the option's doing this, what should I do? Right? All the different stops and all the different, hey, I got to get out because of this roller, that roller, all of these other things that, the challenge doesn't take into account. When going through the over 600 trades over the last 3 years to build this algorithm, over 600 trades in 3 years, when going through them and looking at the data and breaking it all down, it is always about the destination and not the journey. The journey on some of the trades is wild. It gets kind of crazy. It gets pretty, pretty dramatic. But it doesn't change the result of the destination. And the destination could be, a myriad of places, right? It could be anywhere. But the reality is, the stock sells off a little bit in the close. Oh, does that mean something? No. Does it get bought up early in the morning? Does that mean something? No. Well, what if it reverses on that day? Oh, what if the market's doing this and the trade's doing this? None of that is in the algorithm. All of that kind of noise, all that nonsense, that's out of the algorithm. That it just isn't included in any way, shape, and form. And the algorithm's built in a way where I can't step in and add that. I can't step in and go, well, what this candle is blah, 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 blah. I wonder if I should do this, and this, right? Stock was downgraded. The stock was upgraded. Oh, it's built so can't add that noise, can't add that nonsense. But what that does is it does create, especially with a stock like J&J, and we talked about when we got into J&J, that there is zero when it comes to smoothness in terms of trend with J&J. You even look back here and you just think about, you buy it right here and the next day and the next day and the next day and the next day. You think about what's happening to your option and what's happening to some of the emotions of watching it. It can be pretty dramatic, right? It's about the destination over the journey. And that is for all of the algorithm trades as we go forward. It's one of the big reasons why, we're going out longer on the options to that kind of 30 to 60 day period rather than shorter term. And I got the question this weekend. Well, Jeff, since we're just doing, holding trades for 3 to 5 days, why don't we just do weekly options? Well, I just sent the spreadsheet for the challenge test that we did live and showed, the sustainability of the longer term options versus the shorter term options. Now, basically, the shorter term options, 3 losses in a row, challenge done, right? Challenge cooked. Longer term, no, that's not the case. Challenge can survive that. And, any challenge is going to have 3 losses in a row come into it. So if the challenge is going to be cooked on 3 losses in a row and the probability of that happening is fairly decent, there's no sense of putting the challenge at that sort of risk. Does it still, is there still some of the explosive potential to it? Yeah, absolutely. That hasn't been taken away with a little bit of a longer term option. But, some of the variance, some of the variability, has been cut out here just a little bit. All right. So again, I'm not a big proponent of lessons and, you take this trade and you learn this and you learn that because of this trade. I just nonsense. But when it comes to JNJ, when it comes to Procter & Gamble, when it comes to JD, when it comes to these first 3 trades of this challenge, I just cannot emphasize enough. It's destination, not journey. It's destination, not journey. And it's just one where all of the kind of, other inputs just don't matter. There's always those inputs. There's always market wins. There's always, U.S. politics. There's always going to be economic data. There's always going to be the Fed. There's always going to be a new issue. There's always going to be an opinion. There's always going to be an analyst. Those are constants in the market. Those don't go away. But when you take and you mathematically model a stock and you mathematically look and say, okay, where are the probabilities, what type of price action are the probabilities increased for trend, and you're just looking at a pure data set, you're not looking at all of the other nonsense out there and the analysts and the opinions and the politics and the economics, right? And you're saying, okay, you know what, when we see this price action, the probability is pretty high. Well, you know what? The next time we get that price action, is that price action going to happen when the market's calm and when everyone's saying, well, the stock's going to go up? Of course, duh, everybody buy it. No, it doesn't work that way, right? It doesn't happen that way. And so, I made the comment this morning in my note that we could see, this element here where we start to get a lot of signals come in before the market really decides on a direction, where we could see a bunch of downside signals come in before the market decides, or a bunch of upside signals before the market decides on a direction. And when we go and we look at the 600 pieces of data over the last 3 years, a lot of times we will see an inflow or this influx of signals come in as the market itself is still kind of in this consolidation or chop phase. And, naturally enough, if most of them were bullish signals, the market ends up going up. Or if most of them were bearish signals, wow, the market ends up going down. And so I wouldn't be surprised to see that happen. We're not seeing that happen here today, at least not yet. But I would not be surprised to see, that kind of happen and emerge here, this week. Okay. So that's all I'm going to say about that, but hopefully that helps. And, I know it's a little bit of a different mentality, a little bit of a different philosophy in terms of challenge running, with this kind of more automated, system, with the algorithm here. But it is designed to take a lot of the questions out, a lot of the angst and worry and a lot of the what should I do here and what should I do there out of trading, right? And, ultimately to be able to get better results because the trading is, simplified. It's dumbed down. It's not, I shouldn't say dumbed down. It's dumbed down in terms of the, number of decisions and number of things to analyze, right? But it's also, smartened up in terms of the things that it takes into account that are most important. Thanks for hopping on. I will. I'll be back on here at 12:30 Mountain, 2:30 Eastern. Take a look at some of the challenge or some of the trades that come in. I'll put some notes into the message feed as the day progresses. There are some interesting things happening out there, but it's kind of been a whirlwind morning, so I don't have my same prep here done that I normally do. So I do need to kind of spend a little time kind of immersed in what is going on and what is happening out there. And we'll do that and talk to you here this afternoon. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.